Welcome back. You're watching Taking Stock, and this really was a good week for the bulls that we're taking stock of. Joining us now is Ratnesh Kumar, independent market expert and a market veteran who now joins in. Ratnesh, hi, good to have you on the show. What's your sense now? Do you think the market is back on the path of taking the all-time high out, and has the bull market resumed, or do you think some more correction is left in the market?
I think we are anyway in a long-term bull market. So in between you will have ups and downs in the market. Right now what you're going through in the market is essentially there has been a rally which has been based on amount of growth recovery, faith in the new government and policies, etc. But you've yet to see the numbers come through, be it in terms of corporate earnings or macro, and that is the struggle which keeps happening, and from time to time we get corrections. There could be triggers, but broadly that is the story, which is that we've come this far. Now there needs to be delivery on certain fronts, and till that time it doesn't happen, then you will have back and forth in the market.
Ratnesh, hi, welcome to the show. One peculiar trend this week was that a lot of non-performers started to participate. So whether it was Reliance, which went up 9% this week, whether it was something like Coal India, some of the metal names like Tata Steel, Sesa Sterlite, etc. rallied. In the next leg of this up move, when we do resume it, where do you think the leadership will come from?
Well, you see, you have in the market, the basic challenge is the earnings growth. And to that extent, this year, March quarter is going to end with, again, not very exciting numbers, which are going to come out. And FY16 right now, you are at 17, 18, 19% consensus earnings growth, which has come down from 20. So when you're talking about leadership in the market, essentially, so far what the market has done in the last couple of quarters is wherever the earnings are there or they are more visible, those stocks have rallied. So a lot of the defensives, consumers, pharmaceuticals, etc. have rallied. Now in the next phase, now those stocks are already expensive, and in the consumption side you have the additional variable of rural consumption slowing down. And so in that situation, the market will look at value opportunities where their valuations are evident, versus and also where the growth is better relative to the overall market. Because I think 16, 17, 18% consensus earnings growth for FY16 is potentially at risk. At least the market thinks so. So if that is at risk, then market will look at other areas which might have fallen too much, where the value is more emerging, or there could be other triggers.
So what are those areas where you see value emerging now?
Well, I think value is still very much there in the economy cyclicals. That is where a lot of the value hunting will go on, because those sectors have not performed.
Yeah.
And clearly, if the overall belief is right, which is what I have, that ultimately you will get numbers coming through, you will have economic recovery coming through. It may take 1 or 2 years, and you will have earnings coming through. It may take a couple of quarters. Now, on that hope and on that basis, the market will look to find value in economy cyclicals, be it industrials, infrastructure, or construction, or even banks every time there is a dip.
Okay, some of these stocks have run up, Ratnesh, quite a bit, especially in the construction space, in the infrastructure space, and the market is now playing, a balance sheet repair story or interest rate story. But the governor's statement tells us, or his body language tells us, that maybe we'll have one more rate cut at best for this calendar year or this financial year. So, in that sense, do you think some of these stocks may have run up a bit too much?
Not really. If you do get the investment cycle recovery ultimately, which will happen, it is taking time. It is taking more time than the market may like, but turning around an investment cycle, it always takes time. There are lots of variables, lots of factors which come into play. If that eventually happens over the next 1 or 2 years, then I think the operating leverage that these companies have in their P&L as and when the business cycle is better is substantial. So the valuation is not going to be much of an issue out there. More pertinent question is, when and how much does the investment cycle turn? If the investment cycle is indeed turning, then I would not be worried about the valuation aspect of it. I'll buy the right story.
Okay. Apart from that, this really has been a bottoms-up market now for last 3 months or so. Last year was easy in terms of, getting the sector calls right. Any particular theme that looks interesting to you where you think investors can make a lot of money?
So one theme probably on the negative side to watch out for is the rural consumption slowdown.
Okay.
So you've had a segment of the market, especially say consumer sector, which has performed, especially in an environment where market was struggling to find good numbers or good earnings growth. So that is one area where I would say we should be cautious and avoid. On the positive side, the thematic play I would still have is that the government is doing a lot of things. There are a lot of policies which are there. As of now, they are not reflected on the numbers. They will eventually, whether it takes 2 quarters, whether it takes 4 quarters. So from an investor's point of view, economy cyclicals, economy sensitive sectors, regardless of how much rate cut is there, because whether there is another 50 basis point rate cut or another 75 basis point rate cut for the rest of the calendar year, I don't think that will be a determining factor on the investment cycle.
Okay.
Other things will determine the investment cycle, and if that turns, then economy sensitive infrastructure construction, that will remain a good theme. And related to that, good banks. Every time you have an economy which is going into a better phase, the banking sector always performs well.
Okay. What do you do with something like pharma then, Ratnesh? I mean, that's been the big pocket of strength in the last many weeks. Would you increase the allocation or recommend increasing allocation there?
Well, that has been somewhat of a favorite place to hide for the market, a little bit of scarcity, value, premium, which the market is giving. At this point, I find most of the pharma sector quite expensive actually, and it would be tough to increase allocations there.
Okay. And any pockets of value in the mid-cap space? Because mid-caps have been outperforming now for the last many days. And there are these sunrise sectors that people are investing into, whether it's defense, whether, some people are continue to be bullish on auto ancillaries, etc. Any specific pockets that you like now?
No, I think in mid-caps, it is hard to pin down a theme. Mid-caps, each mid-cap would have to be a particular story. And one goes company by company by company. I think historically, we found themes working in large caps, bigger sector thematics. But in mid-caps, typically, okay, once in a while you can catch a particular theme where everything runs. Yeah. Let's say when you had the tech boom or when you had other phases of boom. But otherwise, in this kind of a market where you have a little bit of range-bound activity for another 1 or 2 quarters before it breaks out to the next phase, as he was asking earlier. I think during this phase, as far as mid-cap space is concerned, one has to go company by company, what is the story. And there are some excellent stories always there in mid-caps, and that is why you see them running, because especially what we are finding is that the acceptability and the interest in the Indian market from all classes of investors, be it the domestic investors or the foreign investors, is very strong. You have flows coming in. So ultimately those flows will try to go 1 step or 2 step lower in the market cap index and look at mid caps.
All right, Ratnesh, thanks a lot for dropping by and talking to us, and have a good weekend.
Thank you.
Bye. All right, that's all the time we have on the show. But as we wrap up, here's a quick look at the key events to watch out for next week.
Thank you for that. Quite an eventful week. Next one, tell you, the first day of the week, Monday, will be important for Jindal Steel as the Delhi High Court hears the company's case with regard to the coal block allocation. It also marks the onset of the results season. The first half of next week, we have results like Titagarh Wagon, ACC Cement and DCB as well. On April 16th, we have Gruha Finance, IndusInd Bank and Mindtree reporting their 4th quarter numbers. The market will also be watching the inflation data. Remember, the inflation data for March. CPI comes out on April 13th, while WPI comes out on April 14th. On the midweek, April 15th, we have a VRL Logistics IPO opening. Remember, the price band for that is close to about 195 to 205 rupees per share. As far as the global cues are concerned, the first half of the next week is full of inflation data. We have the Spanish inflation data, UK inflation data, and German inflation data coming in the first half of the week. Also coming in is the Chinese GDP data for the first quarter of 2015. In fact, the next half of the week has G20 ministers meeting of the finance ministers and the central bankers ahead of the IMF meeting, which happens later that week. With that, back to you.
Well, that's what you can look forward to next week. And with that, it's a wrap on this edition of Taking Stock, but we'll be with you again in the morning on Monday. Have a good weekend.